What are your repayment options after mortgage forbearance ends? The type of options you'll have for repaying your mortgage after forbearance ends relies heavily upon what type of mortgage you have, and that's what we'll get into in this video. I'm Tom O'Byrne, real estate agent with Douglas Elliman Real Estate. In addition to helping people buy and sell real estate, I make videos on the New York City and Long Island real estate markets. Hit subscribe to stay up to date. Hit like if you like this video. I'm making this video to help people who are in forbearance or considering forbearance that they do not need to make all of their missed payments in one lump sum at the end of the forbearance period. For most people, that's not possible, and this was addressed by the CARES Act, and that's what this video is about, to give you an introduction to various repayment options. I recently made a video all about mortgage forbearance. Click this card above to view it. I'm wearing the exact same shirt in it because I recorded them on the same day. This video is all about repaying your mortgage after forbearance ends. Keep in mind this video was recorded on June 3rd, 2020, so new policies may be in effect by the time you're watching this. So real fast, what is mortgage forbearance? Forbearance is when your mortgage servicer or lender allows you to pause or suspend or reduce your mortgage payments for a limited period of time while you regain your financial footing. This doesn't erase the payments. You are still required to repay any missed or reduced payments in the future. But the point of this video is understanding what options are available to you based on the type of loan you have and under the CARES Act. Under the CARES Act, the kind of loan you have, there may be different forbearance options. If you have a Fannie Mae, Freddie Mac, FHA, VA, or USDA loan, you won't have to pay back the amount that was suspended all at once unless you are able to do so. Having to make all missed payments at once was a problem faced by early adopters of mortgage forbearance back in March or early April. The method of payment varies depending on your loan and the options offered. Not all borrowers will be eligible for all options. You should take steps to be aware of how these programs work and what you can expect in terms of repaying these amounts. Generally, repayment of forbearance occurs by the amount being repaid in the following ways. 1. In one lump sum at the end of the forbearance period. 2. Added onto your existing monthly payments over a set number of months. 3. Added to the end of your loan as additional payments or as a lump sum. Just as forbearance may differ between the federally backed agencies or entities, so does the repayment of the forbearances. The following information provides some of the options to repay your forbearance based on your type of mortgage. Fannie Mae and Freddie Mac loans. 1. Borrowers are allowed to repay past due amounts within 12 months after the forbearance ends. 2. Extend the term of the mortgage by the exact number of months in forbearance. 3. Add past due amounts into loan balance and extend the term of the loan by the number of months necessary to make the monthly payment the same as the previous payment. And 4. Add past due amounts into loan balance and extend the term of the loan for 40 years, or 480 months. FHA loans. 1. Borrowers may enter into a repayment plan to repay past due amounts within 6 months after forbearance ends. 2. Extend the term of mortgage to 30 years, 360 months, by adding the past due amounts into the previous monthly payment. 3. Past due amounts paid off at the end of the loan in a lump sum. So very similar to the Fannie Mae and Freddie Mac loans, but not identical. VA loans. Borrowers may enter into a repayment plan to repay your past due amount within 6 months after the forbearance ends. 2. Add the past due amount into loan balance and extend the term to 30 years, or 360 months. 3. Targets lower payment of 31% of borrowers' gross income by extending loan term to 30 years with option to forbear principal. And this is straight out of the CARES Act. The USDA loans. Borrowers may enter into a repayment plan to repay past due amounts within 6 months. 2. Add past due amount into loan balance and extend term to 30 years, or 360 months, as long as payments less than or equal to repayment prior to forbearance. And 3. Lump sum repayment at loan payoff. As you can see, there's a lot of different options. You really want to have these conversations with your lenders, but I'm making this video just to show you that you do have options. You have different ways you can start the conversation with your lender, and you just want to make sure that you're not coerced or thinking that you have to roll it into one of those repayment plans where on day 91 you all the payments at once. That's not something anyone wants, I'm sure. For non-federally backed loans, check with your lender and your loan servicer for forbearance repayment options that they offer. You may be able to find information about forbearance programs by checking the websites of your lender and servicer for more detailed information. Your state may offer additional mortgage relief options. Many states are implementing or considering various mortgage relief options that are in addition to federal initiatives, including the suspension of foreclosures as well as additional assistance for homeowners. So check your state's government's website for details. So I hope this video helped you to understand some of the repayment options available to you after forbearance. Thank you so much for watching. I'm Tom O'Byrne, real estate agent with Douglas Elliman Real Estate. I help people buy and sell homes as well as make videos on the New York City and Long Island real estate markets. Thanks for watching and have a great day.